Hey everybody, Courtney Smith here with our April 5th edition of Wall Street Winners. And this is our April 5th edition of the disclaimer. All right, S&P breaks to new all-time highs. This is fantastic price action. But look at the purple predictor. That purple line there shows that the smart money continually sells. We make a new high in the middle of March, and then they sell. Now we're making new highs. We're not making new highs with the smart money. The smart money's selling. What does that tell me? It tells me that the market remains overvalued as far as the smart money is concerned, and is somewhat overvalued based on the fundamentals. If interest rates go up, then it's way overvalued. But with interest rates at zero or close to zero, it's not that overvalued. But the smart money's nervous, so they're bailing out and taking profits. In the Dow, look at what we saw. We saw the market make a new all-time high, but the green line, the little green line, shows that buying pressure actually went down. Now, selling pressure, fortunately, went down as well. So buying was still stronger than selling, but they're both going down, which tells me that the market in general is not that interested in stocks right now. They're bored with them. The NASDAQ has a better purple predictor. So what I'm saying is we're going to shift back to NASDAQ stocks. We've had the big explosion of the interest rate and credit cycle sensitive stocks. That's over now. You got it? That's over. That's a dramatic call I'm making. But look at this thing. The purple predictor is doing very, very well. And you can see that the NASDAQ is stronger than the other two major indices over the last week. So look for NASDAQ type stocks to start to outperform. But also, let me go back to something I touched on a few minutes ago. Look down at the bottom of the chart. Volume is slowly going lower. That's not what you want in a bull market. If this is a bull market, you want excitement. You want the bull market to be validated by the volume. And we're not seeing that. Seasonality remains in a buy signal. Remember that, it's sell in May and go away. Well, we're into April now, so we've got another month of classic seasonality, but we'll use our seasonality indicators because they work a hell of a lot better than everybody else's, okay? So we're currently in a bullish mode, so we want to stay long. We can't fade that at all. Now, down at the bottom, this is starting to get interesting. So the utilities broke above my buy point. That's that green line that I drew across there. And so we closed there one day and then closed below there. But if we close above that green line, let's call it 64, and I'm sorry, 54. God, I can't even see those numbers. Sorry, 64. If we close up there, then we got to start getting involved in the utility market. Now, the seasonality starts May 1, but I always start looking 1 month early because, look, these studies are done based on May 1, but maybe the seasonality actually kicks in on April 23rd. I mean, in other words, it's indeterminate. So we'll let the price action tell us. So since we're in April now, I start looking 1 month before May 1st. We're in April now, so I'm going to start looking to look for buy signals in the seasonality for utilities. And we're there. We're at the green line. So this week, by this time next week, I think we're going to have a buy signal and we'll start buying utilities. Utilities are seasonally strong when the stock market is seasonally neutral. So we're going to keep on making money all year long. Our seasonality, this is from StockTradersAlmanac.com, highly recommended. So far, the purple line has been the one that's mimicked the price action the best. So right now, that's seasonally bullish for the next 2 weeks. Then we have a little dip in later May, but right now, it looks like we should be heading higher. Asset allocation, they dragged more money out of the bond market, and we're about to make new highs here. So we know there's cash available out there. You see, a lot of people say, well, how can the market keep going up? Well, it's because there's trillions of dollars of cash and in bonds that can come into the market. Stock market risk indicator had been under pressure, but we started to rebound. Now the risk indicator, this is a unique indicator. You're watching this video because you see things that are reality. We want to know, how risky does the market want? When the market wants risk, that means stocks. When they don't want risk, that means they want bonds or cash. So we always want to be looking at a bull market in risk is bullish for the stock market. And that's what we have, although it's staggered a little bit here. Global shares also starting to look good here, starting to look good. Yield curve stalled up here just under 170, but that's a good yield curve, okay? That's a good yield curve for the economy. That's a good yield curve for the stock market. So this is one of the deep underlying factors that's helpful. But here's the key. It's a 1-year leading indicator. So what we're saying is next year could be even better than this year. Okay, now we'll have to keep it monitoring. I don't want to make that prediction right now, but the underlying economic forces are going to drive the stock market higher. Bonds. Now, I think we're baking a low in bonds. So I'm going to start fully paid up members. I'm going to move my stop loss down very tight to the market. If you're not a fully paid up member, what is wrong with you? This is a cheap publication. How much money can you make? It pays for itself. Come on. But fully paid up members, everybody, I think we're putting in a bottom here in the bonds temporarily. Why? Well, let's take a look. We see up the upper right, we see the chart itself. That's CRB. It's trending lower. Of course, gold has been trending lower for months. And the blue line down at the bottom, those are 10-year Treasury yields in Germany, which is the top competition to the US dollar. It's trending lower. So I think we're going to see a stall in the green line. And you can see we've already got that going here. So look for bonds to kind of chop around a little bit here, maybe even see a little bit lower yields. But this is just going to be a correction in a major bear market for bonds, bull market for yields. The dollar is coming under pressure. Why? Because of what I just said. If bond yields go down, it makes the dollar less attractive for international investors. When I was the treasurer of a Swiss bank, we scoped the whole world to try to find where the best bargains were in terms of what was the highest yield, and we would hedge the currency. Sometimes we wouldn't hedge the currency. But the point is that if yields are going down in the U.S., it makes the dollar less attractive. And that's why we're seeing the dollar sell off. Nonetheless, it's still a bull market. This is just a correction, and we may get long dollar soon. Gold getting a rally for the same reason. Dollar down, gold up. Now, we have the potential for a double bottom here. We've got two lows right around the 1680 level, close enough, and volume is going lower. Now that means that this is a potential valid double bottom. A break of the high that we made in the middle of March would cause a bull market rally up to around 1840, 1850. That's a tradable event. So we're going to watch that very closely. Our gold key indicators, still bearish. Okay, the middle one, let's call that one neutral, but generally speaking, the strong dollar is what's hurting the gold market. But with stability in the dollar, we might see a pop up in gold. WTI stabilizing. I think this is about the level. I think that supply and demand are equal. So I'm not seeing any trading opportunities here in crude oil. Now Bitcoin we've got higher bottoms consistently. It's a clear bull market. We've been making higher highs and higher lows. But what I told you a week ago is that we're going to consolidate for a little while. But this is still, and the reason is because the volume is going down. Okay, it's going down. So if you're long, stay long. The purple predictor keeps drifting lower. So the smart money's bailing out of Bitcoin. So I can't get super excited about buying it. But if you're already long, stay long. If you're not long, probably stand aside. Okay, freebies, love having you here. We love sharing our information, and hopefully you freebies are making a lot of money from the advice that we've been giving you month after month after month for free. But fully paid up members, hang on just a second for the specific ways to make money from these market analysis. Hey, freebies for Wall Street winners. Really appreciate having you here and love to have you participate in the Wall Street winners every week. But I also wanted to show you where I get a lot of my information and where I monitor my information, and it's from the Stock Butler, stockbutler.com. And what it is that it takes the system that I teach in my Stock Financial Freedom System course, my live 2-day seminar, and it codifies and systematizes and makes it super easy to use. Let me just show you some of the things. I would go there, read their literature, that's really great. But let me show you a couple of things that I use. So I always talk about in Wall Street Winners our best of the best stocks. Now, when you're a fully paid up member, you see my best of the best stocks. But for example, I can come up here and I hit rate and I go to best of the best and I click on it. Now I've already signed in. There it is. There's my best of the best stock. These are the best of the best stocks that you should be looking at buying. In this particular case, you can see the green one is a new one this week. So guess what? In the fully paid up section, this is a new recommendation. We also, Stock Butler also rates the stocks, A, B, C. Here is a change. This one was changed in its rating. So it does some amazing things. It makes it super easy for you to trade, to monitor. It also has other techniques up here. Our hot hands, our pit bulls, seasonality, advanced stock list, many different ways in order to find great stocks and then to monitor them. So when you click on one of these stocks, it comes back and it tells you how the rating occurred. Here's the actual analysis that went in to rating this stock a B. Incredible. And the cost is nominal. I highly recommend it. Go there to stockbutler.com and check it out. I think you're going to love it. Talk to you later.